Good morning and good afternoon, and welcome to the November 2022 WASDE webinar. My name is Stephanie Carpenter with DTN, your moderator, and with me today is Todd Hultman, lead market analyst for DTN. During this event, all participants will be in a listen-only mode, but you can ask questions at any time during the event. To do this, click the Q&A section located on the bottom right of your screen to open the Q&A panel. From there, type your question in the box at the bottom and click the send button. We encourage you to ask questions at any time during the presentation, and your questions will not be viewable by other attendees and will be addressed during the Q&A at the end of the session. Also, this event is being recorded, and a rebroadcast link will be on our DTN website within 48 hours. And as a reminder, our web address is dtn.com. We're ready to begin the webinar, so I'll turn it over to Todd.
Thank you, Stephanie. Hello, everybody. Happy Wednesday. Thank you for joining us for a review of the November WASDE report from USDA. We didn't have too many expectations about this report as far as seeing major changes to the estimates, and I think you'll probably agree at the end that we did not see any big surprises in this report. But we'll go ahead and walk through and just point out what USDA did say and what they tweaked here and there, and make our comments along the way. So USDA tweaks harvest estimates, and that's exactly what they did. Let's go ahead and take a look at the corn numbers first from USDA in today's report. This is the U.S. balance sheet for corn in the far right column where you see the red arrows. That is the latest estimates that just came out this morning for the new crop season 2022 to 23. Right off the top, at the top of the column, you see a new slightly higher yield estimate of 172.3 bushels an acre. So there is a bit of a slight increase. The second arrow points out the crop estimate for this year that's currently being harvested. And in fact, we're about 90% done at this point. But USDA is saying the new corn crop will be 13.93 billion bushels. That is up slightly from the October estimate, and it's still the smallest crop we've seen in 3 years. And of course, we had drought and other concerns pulling back on this year's crop estimate. The big concern, I think, today, the most bearish concern probably for corn prices was that USDA would reduce the corn export estimate. The export pace has been very slow to start the year. And of course, we've got the problems on the Mississippi River slowing shipments. But USDA chose not to make any changes to the export estimate in this report. It's still 2.15 billion bushels. The demand estimate that USDA did change is the feed and residual account. That's the third arrow that you see on the right column. And there was a 25 million bushel increase there, now up to 5.3 billion bushels. So that slight demand increase offset part of the 35 million bushel increase in the crop estimate. And we just got a slightly higher ending stocks estimate there at the bottom of the report. You see in the square, 1.182 billion bushels. That is still the lowest ending stocks total that we've seen in 10 years. So this continues to be a tight domestic market for corn. And we still see plenty of evidence of that with a very strong basis throughout the country and very strong cash bids, especially in the southwestern plains. Let's take a look now at what USDA said on the world numbers for corn. On the world estimate, USDA, and I'll start in the upper right corner there with the ending stocks estimate. The world ending stocks were lowered slightly from 301.2 million metric tons down to 300.76 million metric tons. That's just a very slight decrease and really was very close to expectations. So no major shakeup there. If we factor out China, there was just a slight reduction in available corn stocks in the world, now down to 94.64. So that's very close to what the October estimate was. And that, by the way, is the second lowest total in 9 years, as we'll see in a moment. Other things to note before we leave this page, in the second column, we see that the crop estimates for Brazil and Argentina were both unchanged this month. 55 million metric tons for Argentina. Corn is expected, 126 for Brazil. If you've been following our daily comments, you know that Brazil's crop is off to a generally favorable start as far as rain needs being met, but Argentina has been quite dry, so there is room for Argentina's crop to come lower, perhaps in futures reports. Ukraine's also been a concern, but this month the export estimate of corn stayed unchanged, 15.5 million metric tons. That works out to 610 million bushels. That's also the same as last month's estimate. As you know, there's a bit of drama going on. Well, there's lots of drama going on in Ukraine right now, of course, with intense fighting in the east and southern part of the country. But we're coming up very close, I think 10 days away from getting a decision from Russia on whether they're going to accept an agreement to extend the Ukrainian grain deal to keep shipping grain safely out of the country or not. That has not been decided yet. So USDA kept the export estimate unchanged here at 15.5. And then lastly, there were no major changes to the estimates for China. Still looking for a big demand total of 295 million metric tons. That puts them in need of more imports this year. And so far, China has not bought much corn that we're aware of. So there's probably more purchases ahead in that regard. Here's the picture or the graphic of world-ending corn stocks when we exclude China, and we exclude China for two different reasons. I consider this the more important metric for understanding global supplies, and one is we have a hard time knowing just what is accurate and true when it comes to China's corn supplies, and it doesn't seem likely that they actually have almost 8 billion bushels of supplies in reserve at this time, as they're a major importer and have been for 2 years now. The other factor is simply that China does not export much corn, so they're not much of a factor when it comes to supplying the world with corn. So when we exclude China's grain stocks, we just saw a very slight reduction today in USDA's estimate of global ending corn stocks. 3.73 billion bushels is still the second lowest total in 9 years. So we're down from the larger surpluses that we saw 5 or 6 years ago. History of cash corn prices. This particular chart, if you've been on the webinar before, you're probably familiar with it, but just in case you're not, the blue dots on this chart represent cash corn prices over the past 25 years, and they're arranged in terms of where they fall related to what USDA was estimating as far as ending stocks at the time. So the current estimate that I gave you, 1.18 billion bushels of ending stocks, works out to 8.3% as an ending stocks to use ratio, and that's marked where the red arrow is. The red line running through the dots is the statistical center of where all those cash corn prices lie. And it just gives us an idea that historically speaking, when supplies are roughly this tight, we would normally expect a national average cash corn price of $6 a bushel. Currently, DTN's national corn index is at 674, so we're priced a little above that. And of course, there's some reasons for that. One is the uncertainty of events happening in Ukraine. It just kind of helps give us a bit of an understanding of what to expect from cash corn prices given the supply situation that we're currently in. Corn exports. This is a brief look at the past 10 years of corn exports, and we have the top 4 exporters here. And as you can see, the U.S. is the red line, and our exports are expected to be lower this year, but we're still expected to be the largest exporter of corn in the world. Now, Brazil, the green line, and Argentina, the blue line, together are expected to export 3.23 billion bushels of corn from their most recent crops earlier this summer, while Ukraine's exports are expected to drop 450 million bushels. So we've kind of lost quite a bit of competition from Ukraine, of course, because of the war. But Brazil, mainly Brazil, keeps advancing and becoming more competition in this export market, and we certainly see that here, and we expect that this month. And of course, right now, Brazil is winning the export game because coming off of their summer record crop totals, their corn prices are roughly 12 to 13% cheaper than comparable U.S. corn prices at this point. So it'll still take another couple months for that Brazilian supply to wear down before U.S. starts to see better export business, most likely in the first half of 2023. More ethanol. The ethanol indicators have picked up recently, and just today we had another weekly report from the Energy Department. We had our fourth consecutive week with ethanol production above 1 million barrels a day again. So we're just down 1% from last year's total at this pace in the season. So we're staying very close to last year's pace so far. This chart shows the green line is the price of Chicago ethanol, and we've seen an increase in that price in the past month. And the blue line below shows the price of the RIN market. So the fact that the RIN prices are moving to new highs indicates that refiners are in need of buying RINs. They're in need of more ethanol supplies to blend for their requirements. So ethanol is enjoying a bit of better demand here just in the past few weeks, and it is one bullish factor or sign for our corn demand that I wanted to point out. Hasn't got a whole lot of attention lately. The basis situation, what you see on this map, it's a map of the Midwest with the cash corn bids around the country. The national average from DTN's index right now was $6.74 last night. That's 17 cents lower than where it was a month ago. However, the cash basis remains historically very strong. It's the strongest in over 10 years. That cash basis is, on a national basis, is 6 cents above the December contract. Now, obviously, for corn this year, it really depends where you live. So the problems on the Mississippi River are very well known right now. We have low water levels, and barge traffic is restricted on the river. And in fact, that long oval you see are quotes in the low $6 range from Minneapolis down south as the corn bids along the river are suffering because of the restricted traffic. And of course, this is also the time of year when soybean shipments get first priority, and corn is going to have to wait until early 2023. So right now, the corn bids are depressed along the river. However, if you look in the triangle in the bottom left corner, now you're looking at quotes in Nebraska, Kansas, and parts of Missouri where the bids are well above $7. And if the map went farther down and showed us the Texas Panhandle, we'd see some $8 quotes there as well. So obviously, tough drought situation, tough situation for livestock producers in need of hay and corn and feed and water for their cattle and so forth. So we have a very strong demand situation coming out of the southwestern plains, and it somewhat offsets, or maybe more than offsets, the problem on the Mississippi River right now. Grain shipments, as I mentioned, we have problems with shipments along the river. This is this red line that you see here is this year's total of weekly grain barges unloaded each week in New Orleans. And the most recent total was just under 600 barges unloaded last week. But if you compare it to the other colored lines, which are the previous 4 years, and also the yellow line I threw in there is from 2012, which was also a drought year, you can see that we're underperforming where this activity is usually at. And that's no surprise, but it just kind of gives us a perspective of how much slower this unloading and movement process is along the river. So it remains a very real problem. The forecast remains seasonably dry. We may not see barge traffic return to normal until we get some spring rains. So it could be a long winter in that regard. Before we leave and move on to soybeans, just want to show you the latest on the speculative positions in corn. This year's the speculative interest in corn peaked roughly in May before there was quite a sell-off this summer. A lot of that was related to growing concerns about the economy and higher interest rates, talk of recession, that sort of thing. The sell-off ended in mid-July, and since then, the specs have come back into the long side of the market, but I would say on a cautious basis. They're nowhere near the levels that they were in May, but there has been a new appreciation, I think, for the fundamentals of corn, and that should help lend support to the situation here, because the bottom line is corn supplies are at their lowest levels in the U.S. in 10 years. There's still good demand. Even though exports are in a bit of a slump right now. Corn is needed around the world, and especially with Ukraine somewhat out of the picture, world food and feed supplies are tight. So, all right, moving on now to soybeans. We'll take a look at the U.S. balance sheet, and we have the same situation here. Today's estimates found in the far right column. Similar to corn, we saw a slight increase in the yield estimate from 49.8 up to 50.2 bushels an acre, so slightly better performance, most likely as the harvest moved east and north this year, so got a little better harvest outlook here. The new crop estimate for soybeans is 4.346 billion bushels. That's up 33 million bushels from the October estimate. So we're not talking about big changes here, but just a slight increase in the estimate. The only demand change to speak of was the crush estimate was up 10 million bushels to 2.245 billion bushels. And we've talked probably just about every day in the daily market comments about how strong and historically strong the crush incentives have been lately, and we'll show more about that in just a minute. The export estimate was kept steady, 2.045 billion bushels for soybeans. That was knocked lower last month, but they kept it steady this month. We come to the bottom line. The new ending stocks estimate for soybeans is 220 million bushels. That's still a very tight situation. It's the lowest ending stocks estimate in 7 years. And as you can see, USDA is estimating an average farm price this season of $14 a bushel. Whoops. Looking at the world numbers for soybeans, there's a bit of a riddle here, and unfortunately I won't be able to explain it, but I can at least tell you what USDA says. So the world soybean stocks total in the upper right corner was increased from 100.5 million metric tons up to 102.2 million metric tons. There was roughly a 2.3 million metric ton increase from a prior season, which influenced that total. Now, when I looked at the prior season, the only thing that jumped out at me as far as a significant change from the previous year is that the import estimate for China's soybeans increased from 90 million metric tons up to 91.6 million metric tons. But that would explain a reduction in the soybean stocks, not an increase. So I don't know yet where USDA is finding the extra soybean stocks that they're putting in today's total. Maybe something else. As I find more time, perhaps I can dig in and find out what that is. But it remains a bit of a riddle to me now. The other thing adding to the riddle, if we look in the second column at the South American crop estimates, there was actually a reduction in the crop estimate for Argentina today. Instead of 51 million metric tons, USDA now estimating 49.5. So that would also lend itself to a lower soybean stocks estimate, but that's not what we got in today's numbers. The estimate for Brazil and Paraguay stayed the same as October. And I could mention here that we got some CONAB estimates, which are the South American Crop Agency, and today they estimated a slightly higher soybean crop from Brazil of 153.5. So they're 1.5 million metric tons above USDA's number. They're at 5.64 billion bushels, which by all stripes would be a record crop, as is USDA's estimate here. So they're looking for a big record crop from Brazil early in 2023. Both agencies are, and so far Brazil, weather conditions are off to a good start. The rain has been generally favorable around the country, but they're only roughly half planted, so we still have plenty of time to go. The last link to notice on this page, China's import estimate for soybeans for this season stayed unchanged at 98 million metric tons. So that's still a lot of soybeans that China needs to purchase. And of course, they'll get most of those from Brazil, but they have been an active buyer from the US just lately here. And we're again an active buyer this morning. Here's the history of cash US soybean prices. The current 220 million bushel ending stocks estimate works out to 5% of annual use. So that's where the red arrow is on the chart. We look up to the red line, which is the statistical center of where cash soybean prices normally trade when we're at a 5% ending stocks to use ratio, and we get a historical target of roughly $14.20. Now, the cash soybean price currently is at $14.16, so that's pretty close to being on the mark for where we would expect soybean prices to be at this time. Now, I'll just keep in mind, markets are emotional. There's a lot of things that push markets, and of course, what markets feel about the future also has a lot to do with it. So this is not a solid type of estimating process. There's a lot of fluctuation, a lot of variability to it. So I just want to throw that caution out there. But right there in this case, it's identifying that cash soybean prices are trading roughly in line with where we would expect them to trade historically. Soybean exports were not changed in this report. The estimates are still quite big for Brazil. In the new season, and remember, keep in mind Brazil's crop is still just being planted, but in the new season, USDA is expecting almost 3.3 billion bushels of exports for Brazil, just over 2.04 billion bushels of exports for the US. So Brazil maintains quite a big lead and advantage in the export market over the US here, while Argentina's soybean exports remain fairly flat at lower levels. Now, to be fair, Argentina is the world's largest exporter of soybean meal and bean oil, so they tend to export the crushed products more than the soybeans themselves. So the basic competition in the world is between the Brazil and the U.S., so the U.S. still has a window of opportunity here before Brazil's next crop becomes available, probably roughly in late January or February. Soybean basis across the Midwest is actually fairly constant. Unlike corn, we do see some lower soybean bids along the upper Mississippi River, but overall the demand for soybeans is fairly evened out around the Midwest. The national index right now is $14.16. That's up 89 cents from where it was when we looked at this map a month ago. The cash basis today is 31 cents below the January contract. This is still the strongest soybean basis for this time of year that we've seen in over 10 years. So both corn and soybeans showing very good, strong signs of domestic demand for both. The soybean crush is really the big explainer of the support that we've seen for soybean prices this year. And on this particular chart, you see the blue line at the top, and this is all based on January futures prices, I should explain. The blue line at the top is the crush value. So the value of the soybean oil and the meal that we get from crushing 1 bushel of soybeans comes out to $18.19. That's a very high amount. And in fact, it's so far above the cost of the January soybeans themselves that the difference, the crush premium, the green line, is $3.73 above the cost of the soybean, which is $14.46. This premium is up 70 cents more, even higher, from what we saw a month ago, and remains the highest crush premiums on record for the January contract. So the soybean processors, again, I've said it before, and I'll keep saying it until it's not true, I guess, the soybean processors continue to have a fantastic environment. Closest thing they could have to printing money is crushing soybeans in their business right now. They're doing a bang-up job of keeping that going, and thankfully that offers a big support for the soybeans. The real story is that soybean meal has always had strong demand related to more livestock demand around the world, especially in Asia. But in the case of soybean oil, we continue to see phenomenal growth in the renewable diesel product, and renewable diesel plant capacity in the latest report is still up over 100%. That is, it's more than doubled in the past 12 months. So we continue to see phenomenal growth in soybean oil as a source of biofuels, and that is really fueling this crush value and keeping the demand outlook very strong and bullish for soybeans. As far as the speculative side of the market, it's interesting to me that the speculative side of the market has basically sharply sold off their positions all year long, and not until last week did they really show signs of possibly coming back into this market. Now, even though they've sold off their positions quite sharply, the soybean prices themselves have held up quite well. And my comment is that it's strong commercial demand, and that is demand from the real world, not from the speculative market. But demand for soybeans from the real world is what's keeping these soybean prices firm. So this is actually somewhat of an encouraging or bullish sign to see the speculators largely out of this market, and yet the prices hold up as well as they do. And of course, it just comes back to the good old-fashioned fundamentals of supply and demand for soybeans right now, and it continues to be quite strong. In the case of wheat, here is the U.S. balance sheet for wheat. There weren't many expectations that we would see changes in wheat estimates today, and that pretty much came true. I'll start with the ending stocks estimate at the lower right corner. Instead of 576 million bushels, the new ending stocks estimate for wheat is 571 million bushels. It just fell 5 million bushels, and there were two minor changes, a 7 million bushel increase in food demand and a 2 million bushel reduction in feed demand. And that was the only change in the U.S. wheat estimate. So this 571 million bushel ending stocks continues to be the lowest we've seen in 15 years, and that's a very bullish situation heading into winter. Just as showing up where these wheat stocks changed, what we saw is in the bottom columns there that I'll just work left to right. The hard red winter wheat variety, that's the Kansas City wheat contract, showed an ending stocks increase of 6 million bushels, so that's a little higher. But we saw reductions in the hard red spring and the soft red winter variety. So hard red spring comes down 6 million bushels, soft red winter ending stocks come down 4 million bushels. And then we also saw a slight reduction in white wheat and a slight increase in durum. So very small changes there, but just to show that the stocks got even a little bit tighter in the case of hard red spring and soft red winter, and that's the Minneapolis and Chicago varieties. As far as the world ending stocks estimates for wheat, if we look at the upper right corner, we just see a tiny change. So it went from 267.5 million metric tons up to 267.8. It's hardly worth mentioning. Similarly, the ending stocks when we exclude China also increased by just a slight amount to 123.5 million metric tons. We did note some changes that USDA had of crop estimates. And the first one if we look at the second column, just starting from the top to bottom, Argentina's crop estimate for wheat this year reduced 2 million metric tons from 17.5 to 15.5. We've talked about dry conditions there for quite some time now, and that was not a surprise. It was a surprise to see a slight increase in Australia's crop estimate from 33 up to 34.5 million metric tons. And I say that because Australia's gotten recent very, very heavy rains in the eastern part of the country where there's been some flooding. And there's been talk of concerns about the quality of wheat in this situation. But here today, USDA raises that Australian crop estimate up to 34.5. Canada's estimate stayed the same. There was a slight reduction in the estimate for the European Union, and the estimates for Russia and Ukraine stayed unchanged. Also to the right, on the lower part of the table here, I just wanted to note that the export estimates for Russia and Ukraine also stayed unchanged this month at 42 million metric tons and 11 million metric tons. Wheat supplies, this is our perspective of world wheat supplies, and like corn, we exclude China here from the measurement. And as we look today, we saw just a slight reduction to 123.5, or slight increase, sorry, to 123.5 million metric tons. That works out to 4.54 billion bushels. It's still the lowest in 15 years. So this is still a very tight global situation of wheat supplies that we have heading into winter. And keep in mind that Argentina and Australia really are the only crops that will add some supply to the market for the next several months until we get to June of next year. The history of cash hard red wheat prices, the historical target given the 31% ending stocks to use ratio that USDA is estimating in today's report, the historical target works out to about $6.30 a bushel. But what's not really factored in here is the additional bullishness of having tight world wheat supplies. So we continue to see hard red winter wheat cash prices trading much higher than history would suggest in this supply situation. Currently $9.06 a bushel on last night's quote. So this continues to be a market that just is in need of greater supplies, but we're just not seeing the anticipation of that yet. And of course, all the uncertainty and the danger that we see in Ukraine just adds to the premium in this market of concern about what could happen to wheat supplies. The basis for the hard red winter wheat crop is roughly average at this time. Our DTN National Index, as I mentioned, $9.06 last night. That's down 45 cents from a month ago. The cash basis is 40 cents below the December contract, roughly average. So nothing remarkable that I really have to point out here. It's a very normal looking market in that regard. And then when it comes to the speculative positions, somewhat like soybeans, we've seen specs largely get out of this, in this case, Kansas City wheat contracts on the futures board. Speculators are not friends necessarily or excited about being in a market that's dominated by war and the uncertainty of war. So we continue to see a massive exodus out of this market. And yet Kansas City wheat prices have found support since August because we do have tight supplies in this market. So the fundamentals still, in my perspective, deserve to be appreciated better than what prices are trading right now. But we're probably not going to get much involvement from specs in this market as long as it remains such a dangerous and potentially volatile market. So we're going to have to see end users coming to the table, which I'm sure they will this winter, and having to bid up prices. And so that's what I anticipate the next several months. In conclusion, I would say today's report was largely neutral for all three crops. We have ending corn stocks still at a 10-year low, soybean stocks still at a 7-year low, and global and U.S. Ending wheat stocks still at a 15-year low. So no big surprises today in that regard. And before I turn it over to questions, I just want to mention again that we do have our DTN Ag Summit coming up December 12 and 13. This year it's a virtual event, so you get to stay home and be comfortable. You don't have to plan a big trip. And we'll be bringing speakers and topics to you. You can find out more about this at dtn.com. There's a link for resources and then events, and that should take you to the registration page where it'll tell you more about who's coming and who's speaking. So we look forward, hope you'll give that a try. And we always, I think, have a good tradition of having good speakers and very interesting ag topics to make it worth your while. Lastly, I just want to take a look at the board here. I currently show December corn trading down 2 cents, January soybeans up 4 3/4, December Kansas City wheat down 14 3/4. So it looks like wheat's taking a little hit today, but row crops are somewhat mixed and don't look too affected by today's reports. All right, Stephanie, if you have questions, I'll be glad to take them.
Yeah, we have a couple questions today. The first one's a two-parter. How was the availability of fertilizer for South American plantings? And if less was put in the ground, how will this impact yields going forward?
Yeah, that's a really good question and hard to read. From my understanding, China made a big effort to make sure that Brazil had fertilizer available. You know, China is very dependent on Brazil's crops, and they're interested in getting more of the corn crop in the future. So I understand Brazil got some big shipments from both China and Russia this crop season. So it does look like at least the fertilizer is there. Now, whether the producers actually use it or not, you know, I understand it could still be quite expensive to them. And keep in mind, in Brazil, they use about 3 times more fertilizer than we do here in the U.S. per acre. So they are heavily dependent on that fertilizer. But I would say probably the larger producers that are financially better heeled probably got the fertilizer they're needed, but that might not be everybody. That's it's hard to know, you know, the hard numbers on that, but that's the best I have for you right now.
Thanks, Todd. And one other question. Given a normal Brazilian corn crop, strength of the dollar, water, and rail issues, do you feel that USDA's corn export number is overestimated?
No, and I'm glad you asked. I just wrote about this. Actually, it was for our magazine. And I think I agree with USDA standing pat on the corn export total now, and I understand why that might be puzzling to some people, because corn export sale commitments are down like 53% from a year ago, so it doesn't look good. But keep in mind that Brazil just had their record crop this summer in July, roughly. And they're still working through those big supplies. So the expectations of having corn export sales from the U.S., it's just really not our season yet. Our best window and opportunity for corn exports in the upcoming season is going to be roughly from late January up until June, before Brazil's next second corn crop becomes available in July. So also keep in mind, Europe was very short on their crop earlier this summer, and of course Ukraine being largely out of the picture. I still think there's plenty of export potential for the U.S., and of course we're going to have to find ways of shipping it out and get through the Mississippi River problem. So it may be a situation where, yeah, there could be some reductions coming down the road as far as the export estimate goes. But right now, I don't think we've really lost the bulk of opportunity that we have still to have good corn sales in this season.
Thanks, Todd. And those are all the questions for today.
All right. Well, thanks, everybody.
And thank you everyone for joining the webinar. As a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com in about 48 hours. And if you have any additional questions or would like more information about the topics covered today, you can see Todd's information here listed on the screen. Please feel free to reach out to him. This concludes our event. Thank you everybody for joining and have a great day.